Hey guys, what's going on? Hey, I'm actually here with another video, so that's cool. I actually stayed to my word. It's going to be another stock market video today. I'm going to be showing you a how-to video on the program Thinkorswim on what exactly I do for my settings and why that I have the settings the way they are. I basically everything that I've learned on YouTube myself from Ricky Gutierrez, and so some of the stuff that I'm about to show you, that's what he also does, and that's what I ended up actually liking a lot. So basically, what I'm going to do right now is I might, with the power of editing, edit all this out right now. All right, so I'm back. So, okay, stash. All right, so whenever you get your Thinkorswim platform downloaded, this is going to be how your screen looks when you download this. So this is horrible. Some people might trade like this, some people might not. So I'm going to explain to you guys what I do to make this look a lot better. So what you're going to have to do, there's two different buttons that you're going to have to go to for all of these settings or whatever. So there's this button, it looks like a beaker. It's called Studies, and then the gear button for the settings. So first I like to go to my Studies, and then we're going to put an EMA line, which is exponential moving average line. So moving average exponential right there. And we're going to put this right here, and we're going to put the settings, and I do 20 days on this, right? And then this one, let's do purple. All right, and then I put another one on there, and I do settings, I go to 10 days, and I make this one blue like that. And so these are the two lines that follow the stock, basically. And I do a 20 and 10 day moving average because I feel like that gives me the more accurate time of what direction the stock's going. So you're going to have two lines, one's going to be blue and one's going to be purple, and I use those lines to show if the stock is still in pattern. So if it bounces off these lines, like the 20-day line, I know it's still in a pattern to keep going up, and then I have the other one set because it could drop below the 20 and go to the 10-day moving average and still be in pattern. So that's why I don't want to run one line, because it tends to drop below that one line and then shoot back up. So I like to have that 20 and the 10-day, so I don't bail immediately as soon as it drops through my first EMA. It goes to the second one and could bounce. Now, if it breaks through both of those, it is a break in pattern, and it's going to be on a downtrend. So that's why I have those two. So with just that applied, I'll show you what that looks like. So this is what that looks like. So you can see here, it broke below, broke the pattern, came down, and it came back up, bounced off the line, came up, and then came down. So this is a perfect example of what I was talking about. So if I would have just had this moving average, right, the 10-day moving average, I might have flipped them around when I was talking about it. So here's the 10-day moving average, and sometimes it does break below that, but that doesn't mean the pattern's down. That's why I have this 20-day average. So let's say you don't want to bail out of the stock. You have the 20-day average to wait to see if it's going to bounce off that, which it does in this sense. In this case scenario, it bounces off the 20-day, goes off into another run, breaks through both EMA lines, so it's a break of pattern. So you want to get out of that stock as soon as it broke out of this, because it went on a reversal, came all the way down. But here you go, it goes up, comes down, bounces off this, goes up, bounces off that, and goes up, breaks through both of those. So that is why I have both the EMAs on there. So that might be too long of an explanation, but I feel like I had to do that. That's why I have the two lines of exponential moving averages. All right, so those are the two exponential moving average lines. Next, what I actually didn't have in my original set was the simple moving average. I don't know why I didn't have that on there, but I'm going to show you what that is too. The simple moving average is something that definitely needs to be there if you're going to trade long term. So you always want to do different colors. I'm going to do this one green. And then this one, you want the average of 180 days. So the 180 day is going to give you a more accurate, like I said, this is a good long-term support line. So you want it 180 days so you can see if it's trending upwards for the 180 days. So that's why I'm going to set this at 180 days. I tried typing this in on my computer, but we got to hold the mouse down and get it all up. All right, cool. So we're going to apply that, show you what that looks like. There you have the simple moving average. So this is going to be another support line you can judge your purchase off of. And as you can see, ICPT did really good from July until April. So this gives you, like, if everything's above this simple moving average, it's on the uptrend. If it's below it, it's doing bad, like it's starting to do right here. And you probably don't want to invest in it long term. Short term, it could be great. You never know. With short term, you don't want to be using this for short term. Like if you see this under, it doesn't mean you can't make money off of here. But if you want to invest long term, use this, because like I said, like if it right here, it bounced. So long term, you could have held it from here all the way over here, and that would have been 41% profit right there if you had held it long term over the course of from November to April. That was doing good. Sure, it came back down below here. That would have been scary to hold it and then see it drop, but it did bounce and come back up and bounce and then come back up over here. To make a profit, you could have sold it over here, you could have sold it up here. I'm just using it as an example. You could have held it this long and made that much of a profit because it was on an uptrend. Now, if it breaks, so just like here, like, you know, if it breaks through this pattern, like so it breaks and it comes down and bounces here and then comes back up into pattern, it can also break this pattern as well. So now it's no longer a long-term trade investment. So only be looking for short trades from here on out, from right here. The next study that I'm going to be adding is RSI. So the RSI is right there, and we're just going to keep the settings the way it is. We're going to apply that. So the RSI tells you if how overbought it is. So like over here, whenever you start seeing red, it's in the 70s, 74 area. It's overbought and it's going to sell off. So if you see right here, right when it happened, it started selling off once it got up into the 70s, right? And then it's coasting here. It's still pretty high in the RSI. Like all of these are indicators. I can't stress this enough. Nothing is for sure in the stock market. So no matter how many indicators you have, they're just indicators. It doesn't mean that it's going to happen. Like right up here, this is pretty high RSI. I wouldn't have wanted to buy here because you never know when this is going to go down. But it kept going up, it kept going up. And eventually it does come down. So like that's why I say don't buy when this is up here. Because sure, it's still, if you buy here, you still had 19% growth right there, but no one can tell the future. You could have bought here, and since it's highest RSI right there, it could have tanked right then and there. So don't just use one indicator to decide that it's worth buying or not. So that's the rant I'm going to say, because like right here it hit 68 and it tanked again, and then it had a really good RSI. It was underbought. It was at 28, and if you would have bought there, you'd have had all of that to buy up again, right? And then right there, the RSI was at 62, and it comes back down, and so on and so forth. So this just tells you if it's overbought. So if it's overbought and it's overextended, so up in the 60s, 70s area, it means it's going to sell off. And if it's by the 30s and 40s, that's a good buy area. Doesn't mean it's going to take off, but there's a good chance that it's a good buy and it's going to go up. So that's the next study that I use. Another one is the MACD indicator. Oh, that didn't go. There we go. MACD is going to apply this down here. And this is kind of like a rubber band. So if you think about a stock, it's going to go up, and it's only going to be so far before the rubber band just snaps, and then that's when it comes back down, right? So that's what this is. It's basically a rubber band. So the further apart that the blue and this white band gets, that means something's about to happen. So this got super far apart from each other, right, as it was coming down, so it got further apart, and then right here, it started bouncing back. So it crossed. Once the MACD crosses, that means it's going to go the other way. It's not 100%. Right, like any indicator, like I just said earlier, it's not 100%, but it's a good indicator right here where the blue line crosses. That's when it goes back up. And then as this thing extends and gets further away, that means it's going to come back in. And then it could bounce like it did here, and it goes back up a little bit, and so on and so forth. So every time you see that blue line cross over, it's probably going to start going up, right? So that's a good indicator to use. So MACD crossing is a good indicator. Yeah, I think that is all of them that I use as far as the studies. So now we're going to go over to settings. The first thing I want to do, so right here is the volume. So volume is important. It tells you how many people are looking at the stock and everything. I don't like the volume right there. Some people might, you could keep it like that, but what I like to do is overlap the volume. So when that does it, these become bigger, these indicators become bigger, and then the volume's right here. So you can see where this sold off, a whole bunch of people right there. The reason why it caused this huge sell-off is because all these people in this blue line did that, right? And so then the volume picks up right here and then comes up, and then huge volume spike when it drops, right? So I don't know, I think it looks better. It gives you a bigger picture for the stock. It gives you a little bit more room right here to look. All right, so we're gonna go back to settings, and then next would be the time axis. So as you can see, so this is the latest it's been. So you can't really see further, so I can't really tell. It looks like these lines are pointing down, like it's gonna keep going down, but you can't really tell the direction sometimes what the times look like. And when you zoom in, it's just frustrating because you want to see a little bit more, right? So what you gotta do to do that, to see more of it, you're gonna have to go back to your settings. You're going to time axis, and then right here you can type just a really big number. I just do 300, right? You apply, and so this shrinks the stock down, and then this is the end of the stock. So now you can just focus on the end, and you have all this room. So you can see this thing's pointing downwards. It's probably going to keep trending down. The overall SMA is also pointing down, so it's probably just starting to decay. So this is definitely not a stock you want to look into right now. Another setting. So we're going to go here and go to appearance. So right now, I like mine, the red and the green filled in. I don't know, it just looks better, so I like doing that. So I'm going to go to settings and go to appearance, and then you're going to go to the fill up, and you're going to check mark that. You're going to apply, and now the green lines are filled. And I don't know, I just like the look of that. Let's see, I don't think there's any, I think that's all of them. I think that's it. So there you go, and then this is the end result of what it looks like. You got your 2 EMAs, your 10-day, your 20-day, and your 180-day SMA lines. You got your MACD, you got your RSI, and you got your volume right here in the background. And I just really think this is the best way to set up your indicators, in my opinion. Everyone's opinion is different, so you guys don't have to do it this way, but this is where I found my most success, is how I set it up like this. So yeah, if you like this video, go ahead and like it. Share it, subscribe, do whatever you got to do, comment, all that good stuff if you want to see some more videos. I'm probably going to be posting some more stock market videos because I really enjoy doing this. Don't know when the next video is going to be though, so don't hold me accountable for that. But yeah, so I'll see you guys next time. Peace.